Welcome to Mrs. Royce's Accounting Lecture Series. This lecture is on analyzing transactions into debit and credit parts. Okay, so last chapter we learned the effects of transactions that happen to the accounting equation. Can you guys remember what the accounting equation is? I hope so. Let's say it together. Assets equal liabilities plus equity. And then what two pieces affected the balance of an equity account? Revenue and expenses. Now, the form that we used last chapter helped us visualize the accounting equation. We had our assets on one side and our liabilities and equity on the other side. But because of the number of accounts that businesses use, there needs to be a separate record for each of the account. So when the business owner comes to the accountants and says how much cash I have, all they have to do is go to a certain section, look it up, and the balance of the cash will be there, instead of looking through the tool that we used last week. Accountants keep this information in a ledger, and we're going to learn about that more, of course, in a little bit. But the accounting tool used to analyze the business transactions is a T account. Now, this is what a T account looks like. So what you would do is you would write the name of the account on the top. And then as you see, there's two terms that we're going to learn next: debit and credit. Now let's explain to you what those terms mean. A debit only means on the left, and it is a Latin word. Okay? Debit just means on the left. So if you're looking at your T account, on the left is always the debit side, and that's the abbreviation for debit. Now, credits, on the other hand, are always on the right side. So your credits always go over here. And again, as we showed in the slide before, the title of the account goes there. Now, because of, and we've talked about this a little bit in class, the double entry books accounting system, every business transaction is recorded in at least two accounts. But right now we're going to start with it being just two accounts. So each time you analyze a business transaction, one account receives a debit entry and one account receives a credit entry. Now, if you remember back to the worksheet, we were using plus and minus. Now we're going to use a T account and do debit and credit. Now I want you to take a look at this right here. Do you see the T? And it shows the debit on one side and the credit on the other. Now remember, debit only means what? Left. Credit only means right. Do not get this confused with when you do any banking and you get a credit from the bank or your account is debited. Do not get that confused with accounting. The only thing that debit and credit means in his accounting is you put it on the right or the left side. That is it. It is the nature of the account, what the account means, whether it's an asset, a liability, or an equity account. That's what determines whether your account will increase or decrease. So let's look at this a little more closely. If you look at this figure, it shows that since assets are on the what side of the account? Left. Then to increase an asset, it would be on the debit side of the T account. To decrease or subtract, you would use the credit side of the account. So again, to increase cash, it's on the debit side. To decrease cash, it's on the credit side. Now let's turn over and look at the liability, and owner's equity is on the right side. Very good. So if you're looking at an accounts payable liability account, to increase that, you would have to, because this is on the right side of the accounting equation, the increase is on the credit side. To decrease it would be on the debit side. Don't worry, we're going to practice. What I want you to do now is just look at this. It says, for an asset, and this is something that you're going to need to memorize, debit increases, credit decreases. Owner investment, again, what side is owner investment on? It's on the right side of the equation. So to increase the account, it's going to be on the credit side. It's going to be on the right side. Expenses. Look at this and learn it. Now I want you to think about, when we go to analyze these transactions, put them in the T account. What questions do we ask ourselves? Which accounts are affected, and are they increased or decreased? Now we have to think about, is the increase a debit or is it a credit? And it's going to depend on the type of account. So let's get started. So let's break down our first transaction. Of course, January 2nd, we received, right? Which means it came in cash, where from the owner, it's an investment of $2,000. So the first thing that we're going to do is we're going to label our T accounts. And we're going to label the first one as cash, and the second one is the owner capital account. Now my first question is going to be, if you want to, you have out that little sheet of paper that shows you, but you received cash. So the two accounts are affected. Did cash increase? Yes, because we received cash in. When we increase an asset, because it's on the left side, where does the figure go? Where does the $2,000 get recorded? Perfect, on the debit side. Now you look at the owner capital account. Which side of the accounting equation is that on? You're right, it's on the right side. So in order for you to increase that to show that you have the capital that the owner invested, you put it on the credit side, which only means the right side. Now, because of the double entry, you look, do I have a debit? Do I have a credit? Yes, I do. Do they equal? Perfect. I can keep going. Let's analyze this transaction. Okay, we're going to look at the words in the business transaction. Paid. Cash. Okay, so you know your first account affected is cash. For supplies. Your next account affected is supplies. Okay? What did we get in the business? What did we purchase? Exactly, supplies. So since we got the supplies in and the asset has to increase, what side do we put it on? Debit or credit side if an asset increases? Yes, exactly. The debit side. Now it says that we paid cash for that. So how do we decrease an asset in a T account? Perfect. We put it on the credit side. because we're taking cash away. Remember, no more plus and minus. That is gone. We're using the T account. We're using debit and credit to show the plus or minus. Do we balance? Yes, we have a debit here of 165. We have a credit here of 165. We did it right. Let's keep going. Okay, looking at this one, I know you guys got this. All right, so we look for keywords, right? Paid. Now we look for the accounts that are affected. Cash. 6 months worth of insurance. What are our two accounts? Cash. Because it's 6 months worth of insurance, you're right. Prepaid insurance is our next T account that we have to make. Now, we paid cash for it. Does the asset go up or down? Paid cash. It's going out. So our cash is going down. What side? Down? Exactly. Credit. We got in the insurance. We own it. Yes? Perfect. Since an asset is increasing, what side do we use? Yes, the debit side. We have one debit, one credit. We're good. See, you guys got this. Let's do the next one. Okay, here we go. We bought supplies. Supplies is our first account. Then it says we bought them on account from Canyon. Okay, accounts payable, right? We bought it on account, so we're going to owe later. We always have to put Canyon so we know who we owe. Okay, so we bought supplies. What did we get in the business? Supplies. Right. They came in. So, we got $220 worth of supplies. It would be a debit because the asset, left side, increases. Debit. Now, accounts payable. Credit. Very good. Because, why? Yes, because this is a liability, and to increase the liability, you have to increase it on the right side. Perfect. Okay, now let's take a look at this one. If we look at this one, this is telling us, again, exactly what to do. Paid, cash. So now we write cash on the top of the T account. To the on account, to Canyon. So the accounts payable Canyon, where we just charged and got credit for $220 worth of office supplies, but now we're paying $100 of that amount. So how would we put this in the T account? So we paid cash. So what's going out? The cash is going out. If it's an asset, it would be on the credit side, the right side. And then we don't owe this much anymore, so we debit accounts payable Canyon because we're paying it and we don't owe anymore. So now the balance that we owe Canyon is now just $120. And we're going to work on more on this in class.